All right, Brandon, welcome back and hope you had a good weekend while others have been busy. So the Chinese regulators have been working, and what's your take on it?
Well, I thought, obviously we had a very positive announcement from not just the CSRC. This was also the Ministry of Finance, and so one of the issues surrounding the Chinese companies' compliance with the Holding Foreign Companies Accountable Act is that Chinese law, a rule that prevents the auditor from allowing an on-site audit review, and the CSRC, along with the Ministry of Finance, proposed deleting that rule and actually allowing that, as well as they addressed a number of issues just around what is a state secret, what is the information that could be released, and that they seem to indicate they would defer that to the companies to ascertain. And so really a very strong sign. I think it's very much worth noting that it's a 4-day weekend in China, that they're off on holiday. Markets are closed in mainland China Monday and Tuesday, and yet here's the regulator, working on a Saturday. Not just it's a weekend, but it's actually a holiday weekend. And then I think secondarily would be that it was more than just the CSRC, their version of the SEC. This was the Ministry of Finance was quoted. So I thought that's another strong sign. It's certainly, we've talked about, Marcel, lowering the probability for delisting, and certainly you would argue from the China side, they're doing everything they can to lower that probability.
Yeah, very pleasing to see that they are coming out with actions, changing legislation instead of just talking, which we had in the previous weeks and days. And so yeah, I was really surprised to see that also on a Saturday. And well, I would say we always have to warn, like, this is not the final stages of the US-China deal on this whole delisting issue, right? There still could be things that are going wrong. And one question I actually got from some of my patrons was around, could there be an issue how the SEC or the PCAOB are interpreting this step from the China side, that they have said, like, this is a country issue, right, with China, and solving it just for some companies, let's say the private companies, this may not be what they want to see. What's your take on that?
Yeah, I think it's really been this Chinese law, captures all 273 U.S. listed Chinese companies with their ADRs. So if this rule is deleted, and they say that this on-site audit should in theory open it up to all Chinese companies would have the ability to adhere. What we might see is what we've talked about in the past, is this differentiation between the private companies versus the state-owned enterprises, that, this definition of sensitive information, it's very difficult for me to believe that in an audit review would be sensitive information for a private company, a non-government related company, that audits are about the balance sheet, the net income statement. It's not about who's driving their NEO in China and where are they going, or who's buying things from Alibaba or JD, and what are the things that they're buying. That just does not show up in an audit review. It's just not relevant to the financial statements of a company. And at the same time, though, you could argue that for the very small number of state-owned enterprises listed in the U.S., it's feasible that there's information in terms of government subsidies or government contracts that, for a state-owned enterprise, that might be sensitive. And I think it's very likely or feasible that we could see the small number of state-owned enterprises be delisted. We saw semiconductor manufacturing, SMIC, self-delisted a few years ago from the New York Stock Exchange. So I think you will see this differentiation take place, but there's simply no reason that a private company, like a NEO, an Alibaba, JD, et cetera, Baidu, there's no reason that I just don't believe they have anything that you would fall into an audit review that would be deemed sensitive.
Yeah, right. And well, let's get off the topic of delisting, because what is interesting is actually, let's say, even those companies stay listed in the US, I think still a couple of companies might go actually to Hong Kong and do a secondary listing. And in the morning, I tweeted out that the funny end of the story might be that Chinese equities are most diversified after this whole saga, like being listed in Hong Kong, in Singapore, maybe having all the stock connects with Shanghai and Shenzhen, and also the prospects of receipts being traded in Germany, Switzerland. And what are more of the positives regarding a possible inclusion also in some of indexes like Hang Seng Index? There's a rumor this morning that NIO might get included after being listed in Hong Kong in the Hang Seng Tech Index. So interesting what this could do actually also to the stock. Do you have any knowledge around this?
Well, I definitely agree, Marcel, that if we can get this issue around the HFCAA put to bed, and I think it's worth noting that we're falling into the timeline that the Chinese regulators had previously stated, which is a midsummer solution on June, July. So we seem to be on schedule again. 100%. This requires the SEC and PCOB to sign off and agree. But I think it's clearly the trajectory is on a positive path. In terms of, I would agree as well that the companies have the ability to have their cake and eat it too. That it's quite feasible. We're going to see the companies end up with 2 listings, both in the Hong Kong and in the United States. And that has the benefit, to your point, that being in Hong Kong, you have the ability to become eligible for Southbound Stock Connect, which really is the venue that allows mainland Chinese investors to buy stocks on the Hong Kong Stock Exchange. What we would need to see is that there are rules about the difference between a secondary offering and a primary listing. And so, it's quite feasible that we'll see NIO, it only listed back on March 10th on the Hong Kong Stock Exchange. I can go in and take some, there's going to be some eligibility requirements in terms of size and volumes, but Hang Seng indexes are by committee. It's very subjective. So it's possible you could see NIO go into the Hang Seng Tech. For Southbound Stock Connect, they're going, you're going to have to be a primary listing, and that's why Li Auto and XPeng are primary listed in Hong Kong. We had more recently Bilibili, an online video company, say that they were going to migrate their secondary listing to a primary listing in Hong Kong, which would open it up for eligibility in Southbound Stock Connect. I think Southbound Stock Connect is almost like the icing on the cake. That a company like Tencent, about 7% of their shares outstanding is held through Southbound Stock Connect. So it's helpful. But if you had to choose, would you rather have a U.S. listing or be in Southbound Stock Connect? You'd definitely say a U.S. listing. But if you can have them both, then you're in an even better position, which could be, to your point, Marcel, that could be the ultimate outcome, that they have these 2 listings and you're benefiting from both.
Awesome, Brandon. Thanks again for your time and this information. My last point, I saw you just tweeted out that you're going to hold another webinar. What is it all about, and where can people find it that are interested?
Yeah, certainly on this Thursday, we're going to be hosting for our European UCITS clients an update on what's happening. Just it's obviously a very fluid situation, constant, a new development every day. So right on craneshares.eu, you can sign up for our free webinar where we'll talk about some of the more recent developments and really go back and look at some of our core thesis that what was the rationale behind launching many of these funds in the beginning, and where do things look like today in terms of, has that core thesis changed? So between now and then there might be some there might be more developments, and I would say that between now and midsummer, we know more of these Chinese ADRs are going to get added to the SEC list for in compliance with HFCAA. So those headlines they're going to be out there. It's feasible that the U.S. Congress could move to shorten the window for HFCAA from 3 years to 2 years. We hope they don't pursue that path, but that is feasible. So certainly there's it's not a done deal as of yet. Again, at the same time, the trajectory is looking a little more positive, and stocks are forward looking. So they're changing that probability that hopefully the 2 sides can work this out and cooler heads prevail.
Exactly. Also, again, a kind reminder, this is for informational purposes and not investment advice. Thanks again for joining us, Brandon, and see you in the next one.